Hi everyone, let's cover my Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the 1 hour time frame where we count an impulse to the upside here in a wave A, finished a 3-wave corrective structure to the downside in a wave B, a double zigzag, then we look for continuation to the upside in a wave C. Of course, we can also label this as a wave 1 and a wave 2, but the fact that this range here is so long compared to the move to the upside, it does fit better with a wave B compared to a wave 2. Now, interesting resistance to the upside for a wave C is the area between 104.6k to 105k, but the first area of resistance actually here is the white box, 99.4 to 99.9k. In that area, we have the value area high of a volume profile taken from the low over here to where price is at the moment, and you can also take a volume profile from basically the start of this range, which then also includes this little bit here. You can see that the value area high also sits in this white box. If you then also take a golden pocket from the high of your wave A here to the end of your wave B, you can see that the golden pocket over here is in confluence with the value area high. So that is the reason why I marked that area on my chart. I just want to make sure I keep an eye on it. Now, the invalidation for this scenario is price moving to the downside, touching this low at 94.7k. Now, wave C is an impulsive structure, which means that from this low, we need to count an impulsive move here to the upside on the lower time frame. So if I then go to the 15-minute time frame, then the way I count this impulsively is as follows. So first of all, you can see that wave A or 1 over here, A would be a bearish scenario, but it's also a 5-wave structure. But nonetheless, you're at least looking for a 535 minimum with the potential of continuation. But by all means, this over here is then the end of your first impulse. So here we have a wave 1, 2, 3, 4, 5. And what is very important here is that wave 4 did not overlap with wave 1, which is what you like to see in an impulsive structure. Now, in this case, on the lower time frame, we can go to a 5-minute. You can count here 1, 2, 3, 4, and a wave 5, corrective structure in 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, to then eventually finish your wave 3. Then either in this wave 4 here, we look for a flat or a zigzag structure. It doesn't really matter, as this price action here is your wave 4. And then we look for a final 5 towards the upside, which then finishes your impulse. Now, after an impulse to the upside, we then have, of course, a 3-wave corrective structure to the downside. That's what we're looking for. Now, either that is finished over here, so your 2 or B is then ending over here, with the potential of a bigger WX and then a wave Y continuation to the upside. We do have a daily naked point of control at 97.3, a little bit of support. And we also actually lower have a daily at 96.4. So 2 areas of support, interesting, keep those in mind. But then you have a bit of an extended wave 2 or B, a bit of a bigger correction. But of course, as a bare minimum, you need to change structure, because your most bullish scenario is that your 2 or B is already in here and you just keep building potentially 1-2s, or you're looking for eventually some sort of a diagonal. The issue here is that of this low, can't really count any sort of diagonal here. If so, it's an expanding one, which is very rare. We'll get to that when we talk about the 50-minute bearish scenario. So that is the bullish scenario. Bearish scenarios on the 1 hour time frame, or actually bearish meaning you're going to take out this low 94.7k. Doesn't mean you continue to the downside, because what you see here on my chart is an unfinished WXY. So we have WX and then we have a bigger wave Y to the downside. The reason though that it's not too awesome from a probability perspective is the fact that this low here was already made after a 6-fib time, meaning this range is over 6 times longer than the move towards the upside, which in general is already not very common for a corrective structure versus an impulse to the upside. And extending this range even longer is basically going to impact probabilities even more negatively. So, of course, therefore, preferably you would think, okay, low is in and we continue to the upside, 105k next. Important though here is price taking out this high at 100.2k, because then this scenario goes out. Here we are looking for a 3-wave corrective structure to the upside in a wave B, and then price to move to the downside one more time impulsively to touch the box that we have below here between 93.6 and 94k, and then we continue towards the upside. Your most bearish scenario would be some sort of a diagonal to the downside here. So we then need a 3-wave 1, a 2, 3, and then a 3-wave in 4, and then a wave 5. Wave 4 has to be a zigzag family structure, either a zigzag, double zigzag, or even a triple zigzag. But a triple zigzag is incredibly rare, so preferably you look for a zigzag or a double zigzag. Now you can see that in this scenario, this wave 4 starts to be quite high. And an invalidation for a contracting diagonal, which this is, as the trend lines are converging to one another, is a channel taken from the end of 1 to the end of 3 to the end of wave 2, because the moment price touches this trend line over here, the upper trend line of the channel, you can't talk about a contracting diagonal anymore. It's always going to be expanding, but an expanding diagonal is very rare, never preferred, and therefore the probabilities for this whole scenario decrease significantly. And then your bearish scenario that is left, if you do move up and touch that trend line, by the way, let me give you the level of that trend line at the moment. So to the upside, it's about 99K, right, where the trend line is at the moment. If price touches 99K, moves up, touches 99K, then the bearish scenario here will change to a 1, 2, 3, 4, or 5. And then you need to think about a diagonal like this. Now, it's very ugly. It's definitely not preferred as well. If you compare, for example, then the 3 compared to the 1, incredibly short. And it's just not ideal. So in general, if you move up to 99, it increases probabilities for the bulls compared to the bears. You always need a bearish scenario. That is why I already know if we hit 99, then the bearish scenario is going to be a finished diagonal. You look for a 3 and continuation down, but we need a bit more proof for that before that becomes the highest probability scenario, right? Well, we didn't hit 99K yet, but it's better to be prepared. By all means, though, in this wave B to the upside, you need to count this as a corrective structure. And if you're looking for a 4, you also need to count this as a corrective structure. So then we go to the 15. You can see a little bit less makeup compared to the bullish scenario, but basically here we need to think about a WXY. So we then have A, B, C, that is our W. Then we have a 3-wave structure in a WXY, possibly then ended over here. But then you look for a wave Y, which is then a 5, 3, a 5-wave structure to the upside. And as mentioned, 99K, important for that bearish scenario, but the invalidation for a double zigzag is taking out 100.2K. So that's an important level. If you do take out 100.2K, it again increases the probabilities for the bull. So it goes step by step, right? Like we identified this move to the downside as a higher probability corrective structure that mainly came into play once price over here took out this high. This is where the probabilities changed towards the bulls. And then eventually we touch support, which of course is something we've been waiting for a very long time. So the bullish probabilities have actually always been higher so far in this range. But then as price slowly here starts moving to the upside, there's just certain levels which then impact probability. So you have 99, then you have 100.2, and then eventually there's not much resistance basically between 100.2 and the high. We only have a bit of a daily here, but it's not really a significant level that I have on my chart. But basically here for the bears, again, you need a 3-way structure, WXY here on the chart with an ABC and a wave Y, double zigzag. Alternatively, maybe in some way you want to count this as this is then your A, of course. That's the other scenario. So not counting 1, right? That's the bullish. So if we count this as A, right, 5-waver, we need a 3 and then another 5. But as mentioned earlier in the video, if this is the low of your B, we can't count a diagonal here, but we do have overlap. So that's a problem. Diagonal is expanding, which is very rare, never preferred. So if we're looking for a wave C, then what do? There's also overlap here. So are we counting 1, 2, 1, 2, 1, 2? But in that case, your C is going to blast through resistance. It doesn't really make sense. So preferably this wave Y then finishes either there or there, right? And then you look for a 5-wave structure, 1, 2, 3, 4, 5. Oh, well, damn, we have overlap between 1 and 4. So then you're going to think here, okay, 1, 2, 3, 4, 5. So you can see that actually in a bullish and a bearish scenario, that's what I'm trying to say. I do tend to go in a bit of detail at times, but you're actually still looking for a little bit higher on the 15-minute time frame, and the 1 hour probabilities haven't changed compared to yesterday. Now, if we look at the CVD divergences, then I shortly zoom out to the 4 hour, just for the sake of showing that we do have a bullish CVD here on the 1 hour, higher low in price, lower low on the CVD. Zooming into the 1 hour, you can see that same CVD divergence, but we also had a bullish CVD here, higher low in price, lower low on the CVD on both lines as well. Then we go to the 15-minute, right? And let me just actually press shift. Oh no, what was it? There was an extra, there we go. You can see here, if we only look at the CVD divergences on the right side of my cursor here, that we also had some bullish CVD divergences, right? You can see it over here. So price moving up, bullish CVDs, all of these have played out. Bit of bearish CVD here, currently at the top. Now we do have support to the downside. You are, of course, in a bit of a local uptrend, so probabilities are also still higher for the bulls. Personally, no financial advice, but I'm not in shorts. I'm not interested to short as well until I see significant weakness. So I'm just being very patient with the price action. Now, we also have some news actually today. So 4 p.m. Central European time today. Make sure you trade safe, can increase the volatility on the chart. And then Wednesday, Thursday, Friday, we also still have some more news. So if we then look at the probabilities, then you can see here on the 1 hour time frame, probabilities haven't changed. Probabilities remain higher for the bulls, even though this range is very long. The probabilities are higher that this is a corrective structure and not a impulsive structure. The only impulsive structure we could get to the downside here would be some sort of a diagonal. But for a diagonal, we preferably take out the low at least once, and then look for a bounce, a three-wave structure, and then continue to the downside. So you're still at least looking for a bit of a bounce if you do move to the downside. And if you hit 99K, then you got to think about a finish diagonal, which is going to look like this, right? So then you have 1, 2, 3, 4, 5. It's very ugly diagonal, both in time and also in price. Wave 4 very shallow, but 3 is incredibly short compared to your wave 1 over here. It's just not ideal, but it's definitely something I keep in mind. And the resistance to the upside is important if you do end up with a finished diagonal here. 3-wave corrective structure, resistance. And yeah, you could be looking for price to continue towards the downside. So we just know 99K is important. The resistance here is very important. Passing this resistance and flipping this here into support, taking out 100.2K, that would be positive for the bulls. And on the 15-minute time frame, so locally here, the probabilities are higher to still look for some higher prices. It is difficult to finish any structure at the current high here. Not from a corrective point of view. Of course, you could look for WX and a flat in a wave Y, perfect. But then this is labeled as a wave B and then a flat. So afterwards, you're still looking for price to move up and take the high, or you just continue grinding to the upside. So locally, still looking for higher prices. 1 hour time frame remains bullish till proven otherwise. Keep an eye on resistance. Keep an eye on 99K. Keep an eye on the polylines as well, with the most bearish polyline, of course, being this. So risk manage and make sure you trade safe. So thanks for watching this video. Hopefully you found it valuable and helpful. Make sure to also check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing. I see you at the next one. Bye-bye.